Hello and welcome to Quick Take TA here on Landy's Crypto Corner. Today is August 23rd, 2024, and we're following up with Bitcoin, taking a look at where we left off with our price action analysis on Wednesday and seeing where we landed in terms of what we were looking for. And in this case, Bitcoin has completed a trend reversal on the daily, and that was born upon, well, Friday's candle actually. So where we were on Wednesday, we were right here. Yeah. So we had an attempt to close this higher low swing and close this as a higher low on a closing basis. And the areas of interest that we were looking for were the lower high over here at 61.8 on a close to, that 62,800. So about $1,000 range. Bitcoin actually stair-stepped its way up in the lower term time frames. It kind of closed right on the areas of interest that we'll look at when we get to the support and resistance portion of this analysis. But in terms of trend, Bitcoin has a higher low, higher high trend reversal in place now after, getting that trend break on closes above or the close above 62,755, 62,800. So in this case, it's pretty clear what's happening with trend on the daily, but we do have to look at what's happening on the weekly because this is a Friday video. I want to kind of point out here in terms of trend what we need to see on the weekend. So let's go ahead and flip over to the weekly chart. As you can see, Bitcoin is still in a weekly downtrend. And one thing that you'll notice here is Bitcoin has the chance for a higher low close, not a higher low swing, but a higher low close. That will happen on any close this Sunday above 62,755 here on Coinbase Spot. And that is the main chart that I'm looking at. That's where all the APs or authorized participants are going for their coins. That's where the custody is for their coins for the ETFs as well. So, this is kind of the chart, the one chart to rule them all in this case. I know some people like to use the index. In this case, I need to see a technical closure on the daily above 62,755. Others use CME, by the way. I use Spot, and that's one of the reasons why I think I've been a little bit more accurate than some when it comes to this stuff, because it's a little bit more relevant in terms of the liquidity. So in this case, closes above 62,755 would set that higher low close. The next area that we would need to see break to break the downtrend is the actual wick high. I know that many are looking at the closing high because they're looking at a line chart in many cases at 68, 250 or so. I'm going to tell you, Bitcoin needs to close above $70,000 to break the downtrend, right? And then it will have a higher low close with a lower low wick. But so it will have a trend break, and it can only then from there get higher high closes. We would still need to see at minimum a higher low swing, to actually complete a trend reversal on the weekly. I'd be happy with that, only because we didn't get the higher low swing with the higher low close. So from, on any kind of trend breaks at minimum on the weekly, would want to see a higher low swing. And we'd likely get that. Now, let's go ahead and flip back to the daily for a moment. There are some important things to talk about in terms of support and resistance. So for those of you new here, we work our way through kind of my 4 key pillars to trading or technical analysis, and then that leads to trading. Once you create a well managed or you identify your risk and you have a risk management framework in place for you to actually get trades in and trade what you're seeing on the charts. So we work our way from trend to support and resistance, then volatility, and then that creates the 4th key, and that's momentum. So the first 3 create the 4th, but they're all relevant, and we are finding the confluences between them to identify the areas of interest on our charts. So in this case, let's go ahead and turn on one of our more local things here, our local support and resistance, which I've just termed accumulation and distribution areas of interest. So the areas of interest on my accumulation distribution chart. We'll get rid of the Bollinger Bands because those are technically going to be used for volatility, but they're kind of a hybrid between trend and volatility. So in this case, we can see that Bitcoin, has kind of played exactly, it played out nearly exactly what we were talking about on Wednesday's video. So in this case, we wanted to see, Wednesday close back inside the recover zone. So what did we want to see? We wanted to see Bitcoin continue to close. And I had mentioned this, it can swing below the recover zone. And I wanted to see it close above. And as long as it was closing above the 58.4, it was still going to be fine. I had mentioned I didn't want to see it down there. Well, Bitcoin listened and it stayed above the 60,300 level. The next area of interest that I was looking for was basically the highs here around 61.8 to the wick high at 62.8. We needed to see that area closed above on the daily to get that daily trend break and coming off of a higher low structure. So setting the higher low, get the trend break, you've now completed a trend reversal. We have higher low, higher high structure. So the next area of interest that we wanted to see broken was the 63.8 level here. Bitcoin did break through it and hit the next area. And I'd mentioned it did get front run above the pivot zone. And I'd mentioned this because that $65,000 is the actual first wick high from the prior cycle before putting in the $69,000 the wick high or swing high. So I was kind of calling this bottom side of the pivot zone 65 to 65.5. And then, Bitcoin did hit that after breaching above the 63.8 level in the lower term time frame. So ran up to just shy of $65,000, got, $13 shy. So that's essentially target hit. If it is going to remain trading above the 63.8 level on a closing basis, again, I would still look for this local wick high to get ran around that 65 to that 65.5 directly, maybe. If it does start to breach above there, we get into the pivot zone, which is 65.5 to 67.272. And for the new people here, I want to show you why this is so important. This was the first major lower high of a downtrend within this range, and Bitcoin has been respecting the first major lower highs of the downtrends. So 67.272, we did have lower highs coming off of the 73.835 high, but it was in the context of higher low structure. And the first major lower high of a downtrend was 67.272 before going down to test that 56.500. We can see that the 65.5 is the next big area. That was the second major lower high. Then we had the actual 60,300 level was the base for the higher low. You can see that once it recovered 65.5, it found resistance initially here on the daily at 67.272 before pushing through and then holding that area as support on a closing basis. And in fact, even in this second major downtrend, you can see the first major lower high, right? And I've marked that. That's around the highs above here zone. That's 68 to 68, 2 to 300 to that 70,200. That first major lower high. Well, where did the second major lower high come in? Well, it came in right at that 67.272. You can see how when Bitcoin came down, got its little trend reversal right here on the daily in terms of a closing trend reversal. So closed the higher low. Well, it came up and it headed right to 65.5, found again initial resistance right up against that 67.272. So first major lower high of the first downtrend. Once it pushed above there, it spiked into the area for the first major lower high of the second downtrend. So that is something to really pay attention to. Now, what's interesting about this is we had, another lower high on a close, but a higher high wick right in that same area. So that's going to be two big key overhead levels is the 65.5 to the 67.272. And then above there, we'll just call it $68,000 to $70,000 as the next zone, first major lower high. And, just wanted to illustrate kind of how price interacted with those areas to kind of support why I have marked them as some of the major areas of overhead resistance as Bitcoin approaches them from the underside. Now, to the downside, Bitcoin, it's safe to pull back into and retest this breakout, 61.8 to 62.8. If it does start to drop that area, the last higher low structurally is down here at the risk zone, which is 58.4. But realistically, I don't want to see it dropping out of the recovery zone. So I'd prefer to see it not even getting below 61.8. And I'm going to show you why in just a moment, because there is confluence there. But, it can pull back there safely, 61.8 to 62.8. It can even test below on a swing, right? But I don't really want to see it closing below 61.8. That would start to look, it's 61.7, but 61.8 on some of these wicks. So just call it 61.8 to 62.8. Anywhere below there, and likely going to test this little order block candle on the daily, right around the bottom side of the recovery zone. And then we have to entertain the possibility of it, if it does break down from there, to come back and look at this consolidation higher low around the top side of the risk zone. So essentially, what do you want to see on the daily and even over the weekend? You want to see 62.8 to 61.8 holding, and even better if Bitcoin can hold above 63.8 and continue to test Friday's high and higher. And that's kind of it. That's really all I would like to talk about for the Friday video. If it does happen to break out above $70,000, which is, the weekly lower high that it needs to beat, and like close the weekly above there, then we're looking at the highs and higher, right? We're looking basically 70 to 72 essentially. And then above there, we're looking at the all-time high. I'd be taking it as a zone 73 to 75, 75, 78, 78 to 80, mid to low 80s from there. Now let's get into kind of the next major piece, and that's kind of the confluence with volatility levels. And that is, we'll work our way actually on the daily here, and then we'll go look at some of the lower term timeframes, because there was some interesting things that happened in the way that I called it on Wednesday and the way that it played out on the 4-hour and 12-hour charts. We can see that Bitcoin, the upper second standard deviation yesterday was 63.8. It actually updated on Thursday's closure coming into Friday, and Friday spiked into it and closed above it. That's good. That's volatility expansion. So we see this pinch in the Bollinger Bands, volatility expansion above the key level of resistance there at 63.8, spiking into some of our targets. But from a volatility standpoint, we want to see Bitcoin maintaining above at minimum on the daily, the upper first. Guess where that is? Well, here's a point of confluence. It's at 61.8. It's actually, to be fair, it's at 61.9, but a test back to 61.8 is fine. Test of the upper first of volatility expansion is fine as well. This is going to look a little bit sad for the bulls if they lose the upper first. Again, that's where we're looking back to that 60,300 again, possibly lower into the basis band at 59.5. Anywhere below there, we're looking right back to that daily close open right on the top side of the risk zone here at 58,400. So that would endanger structure, right? Because we just had a trend reversal. You wouldn't want to see it giving up this last swing low. So in this case, I want to see Bitcoin from a volatility standpoint remaining above that 61.8 level. If it can get another closure above the upper second, that would look good. Then we're looking from a volatility standpoint between the upper second and upper third. And of course, that's targeting our pivot zone. So we have confluence there between that 65.5 and 67.272. Bitcoin's Bollinger Bands, or any Bollinger Bands that you put on, they will oscillate ever so slightly. And while price is moving. So when price is moving away, the number of the upper second will drop a little bit. So will the upper third. When it starts to extend through it, it moves ever so slightly. But it's not anything too significant. But it might move up to that 67.272 directly. If it does, drop the downside, worst case scenario, drops the basis, it starts to tag that 58.4. You can see that the lower first is kind of flatlining right around the bottom side of this low structure here. And that's coming in at $57,000 or so in the middle of our risk zone. I'm sorry. Yeah, $57,000. Yeah, that is correct. I was reading that right. Now, we talked about essentially our trend, our support and resistance, and then our volatility as it relates to our support and resistance. This is volatility expansion. So we have the compression, we had the expansion, now we have the compression, then we're getting some upside expansion. We want to see this maintain. So we need to see that upper first held on a daily closing basis to maintain volatility expansion to the upside. It's still more bullish than bearish above the basis, but you want to see that maintained on a close by close basis, especially over the weekend. So keep an eye on it. If you need the indicator, it's in the bit.ly link in my X profile. If you're watching this on YouTube, it's in the link in the video description down below. It's free. You just add it to your chart. Now let's look at momentum. And hey, go figure, we've got momentum pivot is 61.8. So again, coming up Yahtzee here with this, with the actual breakout retest area at somewhere around 61.8 to 62.8. You want to see closes above 61.8. So that would be the area to hold. Now, again, this is a regular Stoch, not a Stoch RSI. For those of you that use a Stoch RSI, if you use RSI, you don't really need a Stoch RSI. Stoch RSI is just the velocity of the RSI. So you're kind of getting a redundant look at momentum because RSI is relative strength and it's momentum based. It is on a close over close basis, but it is a momentum indicator. This is reading price action close over close. So not that it's better, it's just a different look at price action. I don't need a derivative indicator in this case. So 61.8 being the pivot is, it's pretty logical confluence, right? And from an RSI perspective, we actually have some confluences as well. So we have the bull critical zone up here is actually coming in around 65,230. So, again, we're looking at a pivot zone right there around 65.5. That would be right around the edge of the bullish control zone. If we're looking at coming back to scale midline, that would be 60,600. So again, that would still be within the recover zone for the bulls here, but that would be below our upper first because the recover zone is between 60,300. You could give it room, 60,000 to 60,300, and then we've got the top side here around 63.8. You can give it a little room in lower term timeframes, $64,000, which Bitcoin is trying to hold in the lower term timeframes right now. And we'll go down and we'll admire how price kind of played out. This will be the last bit here. And then I'll kind of finish up with just one last, look at the weekly. We'll look at momentum and stuff. But let's go ahead and look at this 12-hour and actually look at the expansion because I mentioned this right before the expansion. I posted this to my X profile or my X account, and I also posted it in the various Discords that Bitcoin was in compression and we were likely going to see it resolve with expansion fairly soon. For those that understood the mission, that is hold the 60,300. It did so perfectly on the daily. It did so very well on the 12-hour as well. And keeping above that basis band. You can see that the 12-hour is still in expansion. So we have this nice compression. We had the big expansion down, mean reversion, chop sideways, hold support, get that compression. Now we get expansion again. To maintain the expansion on the 12-hour, we need to see it maintaining closes on the 12-hour above 63,300 or so. So just below the 63.8 top side of the recover zone here. And technically, it will remain in an expansive posture as long as it's above the upper first, which again is coming in right around 61.8. To be fair, it's a little bit lower than that right now when I kind of look at the horizontal here, but it's essentially coming across the close open breakout. So a breakout retest or the area of the trend break, I should say. So a trend break retest is, fair game by the upper first. As long as Bitcoin is remaining above there on a closing basis for the 12-hour, the 12-hour would remain its volatility expansion. It's preferred that it stays above 63.8 right now. But we can see that from last week, even the 4-hour is still in an expansive posture. In fact, the upper second standard deviation, and this still actually has some room, 82/49. Ooh. Bulls, if you can take advantage of this over the weekend, please do so because I am long. All right, so 63.8 is the upper second. To maintain aggressive upside expansion, bulls need to continue to close above here on the 4-hour to keep that expansion rolling. The upper first is, guess where? It's right around 62,400. Likely in the next 4-hour candle, it's probably going to be around 62.8. So again, 61.8, 62.8 retest would be fair game by the upper first. And as long as Bitcoin is maintaining above the upper first, I would continue to look at this as even if it loses the upper second and it's still expansion, but as long as it's maintaining the upper first, it's more likely to go test wherever the bands expand to, which is likely going to be the same areas. You can see the upper third is right around the bottom side of the pivot zone there at 65.5 as well. So it looks good. And you might remember that on Wednesday, I'd mentioned, if Bitcoin could hold the 60,300, I'd be looking at, 61 and then 61,800. And we got that 61.8, was tagged again. In the candles here on Thursday or Friday rather, Thursday into Friday, we saw both of those criteria met. Saw Wednesday into Thursday into Friday, tag this high over here, and then the 62.8 moved through. Once it closed through there, where did it hit? Directly hit 63.8. So above 62.8, we were looking for 63.8. Above there, we were looking 65 to 65.5. Essentially, we got that. So, Bitcoin playing incredibly technically again. Love to see it. Boil it down. You want to see 61.8 hold on a daily close. It's fair game to get retested. It could even swing lower, but you want to see it closing above there on the daily to maintain the integrity of this move up on expansion. 12-hour looks good for expansion. It's just nice. It's a nice move up, especially when it comes to expansion, that nice compression into re-expansion to the upside in this case. What you don't want to see is a full-on run of the band. So run the upper second to lower second and third. That would be bad. But that's not the picture that's being painted, at least right now. I do want to look at 12-hour momentum. Yeah, so 63... It's basically 63,400. It's still above there. I hope the bulls can actually get a little bit of a weekend move to the upside. That would be nice to actually see, take advantage of the lower liquidity environment, because I don't want to see this 12-hour turn, at least at minimum, without a nice bullish reset. And there is a case to be made that it got a bullish reset after putting in a higher low structure here. So could potentially get a higher low reset again, but I hate when it closes nice and bullish on a weekend, because if it's a lower liquidity weekend and the bulls don't take advantage of it, it usually results in a bit of a retrace. Let's go ahead and look at the weekly for momentum. We already talked about what needs to be broken, but I do think this is important for both bulls and bears to understand about the pivots. Again, 62,755 needs to be closed above on Sunday to set the higher low close. Obviously, lower low wick. And again, what the bulls need to see to break the downtrend is closures above the wick high at $70,000. That would be a trend break. And then from there, I would just need to see a higher low swing to complete the trend reversal, because you already have the higher low on a close. We just need to see a higher low swing, and of course that would be a higher low close. But even a swing in the same candle, swing high to swing low, might be fine on breakouts above $70,000. Now, what's more important though, I think right now is, bears might be thinking they're going to be okay. This is a little bit of a warning for bears and for bulls, honestly. Bears, if the bulls close above 62,755 in the weekly and set that higher low close, you're probably looking at further upside in the timeframes below the weekly. So, don't get too excited. Even if you're going to get excited for further downside at some point, there is the chance, that Bitcoin crosses back down on its stoke momentum on the weekly below $64,000. Like, let's say it still completes the low being set on a close. So it closes above 62,800, but it closes below the pivot here for momentum at 64. Don't get too excited yet, bears, because that's only an initial cross down. You need to see follow through and you need to see trend breaks on the daily now because it is now an uptrend. So don't get too excited. Bulls also don't get too excited because we need to see continuation. Excuse me. We need to see continuation of this move to the upside and through some of those key levels, in particular 65.5 to 67.272. You need to see closures above there on the daily and some medium term timeframes below the weekly that then, give the bulls a fair shot at $70,000 at a $70,000 weekly downtrend break. So, I don't think anybody should be celebrating too much right now until we see how this develops over the rest of this weekend, see how the weekly closes, and then see how, the Monday session opens up and kind of gauge things from there during the next weekly session. Now, I do want to call this out because I think we have, next week is the last week of the month. So we're going to be doing some more macro stuff on Monday. We're going to talk about kind of where the weekly closes and then where we want to see the monthly close if we're bullish and where we want to see the monthly close if we are bearish. And it doesn't matter which side of the fence you're on. Bears, you've been a little aggressive lately in calling it, bull market over, especially in the context of I'm going to give you a little preview, bears, as I'm neither bearish nor bullish. I will switch biases mid session, like mid New York session for those of you that are traders, because I am a trader. It's what I do. And in this case, this is shaping up to be a real nasty bull flag if it's going to play. So just be aware of the context and the fact that this is not there's no closing high even in yet. Closing highs would need to come on closes below, 60,622 by the end of the month. So there's not even a closing high in here yet. And this might just, in fact, result in higher low structure on the monthly. Last higher low was the $25,000 region. $26,000 on a close. So, you're looking at a big old, basically bull flag. It's essentially what it would start to look like. And then, just be careful, bears. I know you've been loud lately, and the bulls just had a nice recovery, so they're going to be cocky. So, they need to be careful locally. But, the bulls still have trend on their side on the higher term timeframes. So just keep that in mind. And I'll talk to you more about this stuff on Monday. You all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And have a great weekend. Enjoy yourselves. Go out, touch some grass, touch some ass. And I'll talk to you again on Monday. Landy out.